Imagine waking up, not to the dread of going somewhere, but to money working for you while you sleep. Not coins clinking in your pocket, but the sweet sound of dividends depositing into your account automatically. I'm CashProfessor, and today I'm going to show you that financial freedom isn't just a dream. It's a tangible reality within your reach. Retirement means different things to different people. Reverse mortgages, selling your assets, moving to a cheaper city. These are all options, sure. There's another path that gets overlooked way too often. Living off investment dividends. Today, I'll teach you 3 fast ways to earn $5,000 every single month. What's the magic formula for your ideal investment amount? It comes down to the lifestyle you want and the numbers behind it. The average person spends about $65,000 per year, but that doesn't have to be your number. You adjust based on your needs, your dreams, your level of comfort. Picture this: a life where your investments generate consistent income and you enjoy the fruits without ever touching the principal. Like a money tree that keeps growing and giving. I'm going to show you how to hit $5,000 per month. That's $60,000 a year. First, let's understand dividends. You own part of a company through stock. When that company profits, it shares some with shareholders. That's a dividend. Dividend yield. Simple math. Annual dividend divided by stock price. $100 stock paying $10 annually, 10% yield. Understanding this lets you earn regular income without selling shares. Now, let's dive into the 3 strategies. Strategy 1, covered call, ETFs. One of the fastest paths to living off dividends is investing in these unique funds. They offer investors a chance to earn income from both stock appreciation and dividend payments at the same time. How does it work? ETF invests in and also sells call options on those same stocks. These options give buyers the right to purchase a stock at a specific price within a certain time frame. When the ETF sells these options, it collects premium income and distributes it as dividends. Notable covered call ETFs include XYLD, OILK, and EWZ. These funds typically offer double-digit yields, far above what traditional dividend stocks provide. Let's look at the numbers. XYLD at 11.83%, OILK at 11.82%, EWZ at 11.81%. The beauty lies in generating income from both dividends and option premiums, creating a more stable and reliable passive income stream. However, risks do exist. Options may expire worthless, or stock prices may decline. Let's apply this to your goal. To earn $5,000 per month, that's $60,000 per year. At current yield levels, you'd need to invest approximately $280,000 to $360,000. That's incredibly appealing compared to traditional dividend stocks, where you'd need $2 million to achieve the same income level. Covered call, ETFs, allow you to reach your goal without requiring excessive capital. Now, let's explore another way to earn $60,000 per year. Strategy 2. High-yield REITs. Real estate investment trusts. Think of REITs as teams that invest in real estate properties like shopping malls, office buildings, and apartment complexes. They generate income from these properties and share a portion of it with investors. For passive dividend income, some compelling REITs to consider include Harbors Investment Corp with a dividend yield of 20.3%, Brandywine Realty Trust with a dividend yield of 19.9%, and Orchid Island Capital Incorporated offering a dividend yield of 19.4%. These REITs have a strong track record of providing investors with consistent dividend income. Historically, REITs have delivered an average annual return of 10.8% over the past 20 years. It's important to know that REIT income depends on rental rates and the overall economy. They can offer higher returns than traditional stocks, but they carry risk during economic downturns. To earn $60,000 per year, an investment of approximately $360,000 is needed. This amount can vary depending on which REITs you choose. The ideal approach is to invest a set amount regularly and let dividends accumulate over time. With patience and commitment, financial independence within 5 to 7 years is achievable. Another advantage? Most REITs pay dividends monthly. This makes them especially attractive for those seeking a steady income stream. Now for strategy 3, Dividend Aristocrats. These are special stocks within the S&P 500 index that have a unique record of increasing dividend payments to shareholders for at least 25 consecutive years. They are considered excellent options for those seeking investment income. Top dividend aristocrats include 3M, Leggett and Platt, and Walgreens Boots Alliance. These companies offer an average dividend yield of approximately 7%, lower than covered call ETFs and REITs, but extremely consistent in their dividend payments. To qualify for this elite group, a company must have increased its dividend payout for at least 25 consecutive years. Though they come from different industries, they share common traits: regular dividend increases, strong growth history, large scale that makes acquisition unlikely, and better performance during tough economic periods. Let's calculate for your goal. At a 7% dividend yield, reaching $5,000 per month requires a $500,000 investment. Compared to the $2 million needed with traditional dividend stocks, this is a fraction with the same payout. It's recommended that you spread investments across multiple dividend aristocrats to reduce risk. Their inclusion in the S&P 500 adds further credibility to their performance. You now have 3 powerful strategies to earn $5,000 per month in dividends: covered call, ETFs, high yield, REITs, and dividend aristocrats. Each path can lead you to financial freedom. The choice is yours.